Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, everybody. Well, good afternoon, everybody. Welcome back to another live stream here in the markets. We are preparing for the Fed meeting minutes, which should be a pretty market-moving event. I'm joined here by James. James, how's it going, man? Oh, I think you're muted. Hold on. You're unmuted. Oh, their mic isn't connected. Oh, James, I think your mic is not connected right now. It says
there you go. Can you hear me now?
Oh, can hear you.
Okay,
hey, how's it
cool.
going?
Yeah, I'm doing good. And I was just saying it's old habits. You saying good morning. Normally we do the morning stream, but not today. Today we got the afternoon stream because we have FOMC meetings minutes here happening very soon, where they're going to detail the latest FOMC report. We're going to get some more insight into that, and we have a special guest, Chris Pulver, going to be joining us here in just a little bit to go over that with Nick. So lots of exciting stuff happening in today's stream.
Yep, should be an eventful one. And of course, as you mentioned, Fed meeting minutes, a big deal because, again, it gives us guidance. It gives us just insights into what the Fed, who sets our monetary policy in the United States, is up to. James, last night it was last night for us, the RBA decided to pause on their rate hikes. So just a little bit more of an update on the central bank side of things. The central bank in Australia decided not to raise rates, keeping them firm. And so it's an interesting trend. And again, all eyes kind of turn to this meeting minutes report as we get started. I would ask you to take a look at things that are further up ahead for us today, James, but I think we've got enough on our plate. We can cover that in tomorrow's show, as always. James, thank you for tuning in here and joining us. Now, guys, what we're going to do here is we are going to go right in with Chris Pulver in just a moment. But before we do, we're going to just take a quick break to listen to our newest prop firm sponsor. We're really excited about this. So we're going to roll this clip, and then we'll be on with myself and Chris Pulver. So, James, thanks, and let's roll the ad.
Thank you.
Attention A1 Trading Show fans, if you're looking to get funded, we've got a solution for you. Our partnered prop firm FX2 Funding helps traders get access to up to $200,000 in trading capital. FX2 Funding is not your average prop firm. We've chosen them as our partner because of their fair examination rules, their professional and available customer service, and they have an outstanding reputation in the prop firm space. Here's a quick look at their evaluation process. First, they don't have a time limit on their evaluations. That means that you can take your time when passing your evaluation. There's no pressure to rush your trading. Second, there is only one phase to pass in their evaluation before getting access to your funded account. Also, their evaluation fees are fairly priced and fully refundable upon passing. Once you're funded, you'll be able to keep up to 85% of your trading profits. Finally, a rule we know swing traders will love, you can hold your positions over the weekend. For a limited time, get 15% off any of their account challenges with promo code A1Trading15. That's 15% off any account challenge with code A1Trading15. If you're ready to get funded, we're dropping a link in the chat right now, and you can also find it in the description down below. So go ahead and get signed up today for 15% off with promo code A1Trading15. Now, back to the show.
All right, and we are just about 10 minutes out from the meeting minutes being dropped, and I'm joined by the one and only Chris Pulver. Hey, Chris, how are you?
Hey, guys. Good afternoon. Happy Wednesday.
Yes, and glad to have you back. So this has kind of been our recurring theme recently. We've had for these Fed meeting minutes or Fed meetings where they announce rate decisions. We've been inviting Chris back on the show. You guys absolutely love his commentary, and I certainly do as well. So Chris, we've got the meeting minutes dropping here in about 10 minutes or so here. Markets will, of course, be moving in response to what is said here. From the last time we spoke, where are you at with do you have any trades on? Do you have anything you're looking at? Of course, I'm looking at the dollar right now, trading up a little bit ahead of this move. Are you still trading any dollar crosses?
I am. I just closed out a profit last week on Aussie dollar. I shorted it at 67.60, protected profits at 6600. So that was a nice 150, 160 pip win. Aussie New Zealand was a nice win for us in the trading room. Yesterday was interesting. Coming out of the holiday trading, the New Zealand dollar was pretty strong. I wonder if July is going to be a slower volatility month, and if the market's going to start looking to price in some sideways movement favoring some carry trade. So Kiwi right now sits at that 5.5% for their official cash rate. Coming up, we have the meeting minutes today, but July 26th is the FOMC rate decision. So if I'm back with you guys on that, that'd be great. But that's the 26th, expected to be a 25 basis points hike from the U.S. Minutes today are probably just going to communicate what Powell's been pounding the pavement with the last couple of weeks. He had they're talking about the pause was from June. They're going to raise rates in July. Looks like the Fed members altogether are in agreement. There will be no cuts coming this year. That hasn't derailed the markets, though. I mean, I think what's going to be interesting, taking a look at instruments like the S&P, the NASDAQ, I do think that a little sideways action is probably happening for July. Did some digging into like historical averages in July. The month only finishes positive 48% of the time. So we have more down months in July than we do up months, and that goes back, 50 plus years. And if it is an up month, it's only like fraction of 1%. So I think with that big run we had to end Q2, I could see July being a little bit of a correction, a little pullback, and then we're going to see really where the conviction is on these bulls coming out of summer trading. So July, August could be sideways. To me, Nick, I think that I talked about this morning in my trading room. I think that the pain trade for most investors is going to be just making them all miss out. And so I'm still looking at any type of sideways movement or dips on the indices are still going to allow some rallies later in the year. Even if it's irrational, even if the market doesn't make any sense, even if we're in a recession by Q4, I think the markets can still find a way to rally up to the highs in 2021 and 2022. That's my thoughts for this year.
Yeah, no, there's so much here to talk about. I think that when you talk about, risk on getting a bid here, and then of course also the fact that the dollar is trading up prior to the meeting minutes being dropped. I think I'm with you on that same page where, hey, Jerome Powell has been pounding the drum with the concept of, hey, more rate hikes are not off the table. We are not looking to cut this year. They've been very clear with their stance on that. And yet at the same time, the stock market, like you said, has just been rallying without fail. What hasn't been so good has been the gold markets, which we're maybe able to get into here in just a moment. But I just want to talk technicals here for the dollar. As we go into this, guys, of course, whether you're trading dollar crosses, gold, S&P, of course, everyone is going to be paying attention to the dollar. It is the most traded thing on earth. And when we talk about the dollar here, it's at an interesting spot. The dollar has had a good bit of a run up here recently. As we zoom out here on the 4-hour chart, we're now kind of stuck in this range, and properly so here, as we do, of course, have the meeting minutes coming out, which should give us some volatility either ways. For dollar bulls, technical breakouts here to the upside could be interesting. That 103.4 level has offered a pretty good resistance point recently. We saw that top out here at the end of June, has been sort of sideways and stagnating since then. Question will be, though, with the meeting minutes, I guess the expected, as Chris pointed out, is that they're going to kind of reiterate the same things of, hey, we're, still not where we want to be with inflation. We're still going to stay hawkish, that sort of thing. This hawkish narrative is still what is to be expected. That's why we've seen the dollar perhaps rallying here prior to the drop of those meeting minutes. However, the question will be if there's something in there that has more of a grip on the market, perhaps showing hawkishness, perhaps a commitment or a discussion about rate hikes or something like that in the meeting minutes. That could be very strong for the dollar. And I would say watch very closely, guys, for breakouts around 103.4. If there's nothing of super substance in there, any tradable movement up there could be met with, strong resistance. The other thing I would say is for the bears out there, the dollar is well off of its support zone here, I would say around 102.85. Question would be if we were actually able to break underneath that level. I would say that could be kind of a trigger to a bigger, longer term dollar bearish move. But this is, of course, just taking a look at the 4-hour chart. For the longer term swing traders or for the scalpers, of course, you may need to adjust your time frames, but this is what I'm seeing here kind of as a 4-hour chart. We've got 734 people in here right now, guys. If you would do me just a quick favor and smash that thumbs up button on the stream, it does help to get the message out to more people. And if you enjoy my commentary or Chris's commentary, Chris has his own YouTube channel. We've dropped the link in the chat as well just a moment ago for you guys. If you would like to click this link and find Chris's commentary, that would be also a great insight to you. I want to come back to on that S&P concept, Chris. So yeah, really interesting time in the S&P 500 because as we've just mentioned, commentary is still strong, still tight on the, inflation is still a problem. Do you think that if today's meeting minutes kind of walk us through what would be looking for, what would the bulls be looking for? What would the bears be looking for as we come into this meeting or these meeting minutes being dropped?
Yeah, I think the bulls are looking for anything that shows that, okay, we can tolerate maybe the one rate hike in July, but as long as there's not explicit details of 2-3 rate hikes by the end of the year, I think the market's bracing for the 25 hike and then pause and no cuts, and that's fine, but we'll see where things go. I just think that the bulls are winning out on everything right now. But what's going to be interesting is now that we've crossed that first half of the year, if I'm not mistaken, the S&P 500 had one of the best first halves of the year since the 80s. So it's been
I know that was true for the NASDAQ, but yeah.
So to have a second half of the year, I mean, again, I think July, August are going to be typically pretty slow. September is historically the worst month of the trading year. But Q4, I mean, I think that we might see just an irrational run where the bulls just have control and the stage has been set for that catch-up trade, right? We had, the S&P 500 has been led by 10 stocks and you've got 490 that can play catch-up. The NASDAQ has been led by 5 stocks. There's 95 that can play catch-up. So what's going to be interesting in the NASDAQ is it's had such an incredible run from that double bottom with October lows and January lows. And now you look at it and it's up, 35 to 40% nearly. And it's being led by 5 companies. So with rates going higher and pausing, if you think about it rationally, that's the entire reason that the market dropped last year, because the Fed was on this hawkish rate hike cycle. It's going to be more expensive to borrow. Tech companies are going to struggle to provide profit margins. And yet we're not really in any different environment. So I do wonder if there's going to be a shift where, S&P has more of a catch up. S&P maybe outperforms NASDAQ the second half of the year. There's obviously a lot more companies to choose from the S&P. But as with any historical significance in the markets, it's interest rates and it's earnings. We have good companies that are doing really well, but the upside potential on companies that have already run 100+% for the year is slim. It's like it feels good to be in Apple and it feels good to be in Microsoft, but they've already ran a lot. And so I'm looking for trades that offer 2, 3, 4x returns and asymmetry upside. And so I'm looking to position for that. And also, I mean, I was talking about this morning in my room, the upside potential of 8 to 10% on the SPY to hit the highs. Same thing on the Qs, 8 to 10% to hit the highs. I'm going to try to use a lot of option trading on my equities and options portfolio to generate the extra alpha. So if it's a 10% move, I'd like to generate, 20 to 30% profit on that, because I can be active with positions. I can lower my cost basis, increase, if I'm long options, short options, whatever it is, I'm just going to try to lower my cost basis, hang on to what I want, buy at levels and accumulate more. But if I'm going to make a forecast by the end of the year for the second half, I think the market makes it very painfully obvious that if you got out of the markets last year for fear, you're going to be regretting it this year. And that's where we retest the highs. That's my thoughts.
Yeah, no, I mean, I see it the same way. I mean, even going back to your concept about, the different selections you have available, you could trade, of course, the NASDAQ, but guys, there's also, you have, the S&P 500, you have the US 30 or the Dow, you have the Russell. And I've actually, going back to our concept about contracts and options, Chris, I've been selling puts on a couple different indices, real simple, collecting premium trades. I'm dipping my feet. I sold IWM contracts, DIA, of course, the Dow Jones, sold contracts on that. Both of them doing quite well. I'm actually, this is a really small trade for me, but also sold puts on silver, and that's doing all right. Interestingly enough, in fact, I want to talk metals markets for our viewers here. Silver up today, gold down. Really confusing stuff here. There's silver and there's gold. Gold underperforming here today. Perhaps a little bit of fear coming into this meeting minutes. By the way, we just hit breaking news. So we do have, of course, the meeting minutes are out now. Of course, this is not your usual news where it's like a big number and then the market spikes. This is going to take some time. This is the meeting minutes being dropped, in markets volatility wise may look to increase here in the next hour. If you guys do have the meeting minutes pulled up, please feel free to share them. And if anybody could get a link to me, that would be awesome. I know I always have a hard time finding that. Chris, where do you usually go to get the meeting minutes?
I will go to financialjuice.com and just get some of the real-time headlines. And then there'll be links to the meeting minutes. There'll be all the different outlets that are showing headlines, and just easy to kind of look at a glance and recap some of the big points.
Yep. Very nice. Yeah. Okay, cool. Yeah. Usually I'm just looking at headline news as well, just to get an idea of what was said. Of course, that the meeting minutes are being dropped here.
I'm seeing right now, Nick, it says almost all participants judged it appropriate or acceptable to leave target rate unchanged. So potentially, I don't know if that's signaling a pause for July. So one thing to watch, I'm sure you check this out too, but the CME watch tool, the Fed watch tool, that right now is around 86% probability of a rate hike for July 26th. If all of a sudden this language is coming out that there's appropriate rate unchanged and it's data dependent month to month, those favoring an increase noted very tight labor market, stronger than anticipated economic momentum, little evidence of inflation being on a path to return to 2% target over time. Well, that sounds completely conflicting to what I just read. So
yeah, no, and I'm pretty convinced they make these things purposefully confusing, just to throw everybody off.
Yeah, mild recession is likely to start later this year, same as in the May minutes. So that's another thing that might grab the market by the throat a little bit, is the reality that if you notice this too, if you've been watching the 2- and 10-year Treasury yields, you notice that we're back to the deepest inverted yield curve that we've had for a long time. We're back to that 1% low like we had back in March. So again, like the short-term treasuries just continue to climb, creating that bigger differential. And again, I think if something breaks, then the Fed's going to be reactive, whether that's, cutting rates, raising rates. Something's going to be like, we're going to form tops and bottoms by something breaking. It usually has been happening the last, 15 years. Something breaks,
Yep. And so that's the question is, the constant weighing of how much can the Fed go without hurting the economy right now? Numbers have been pretty economically resilient, but that does give, like we just pointed out, there is some room there for perhaps more rate hikes, and it does seem like they're kind of committed to their concept, probably kind of as expected, which is why we're not seeing any groundbreaking knee-jerk reactions out of the market right now. Dollar's still kind of on its course here between the two support and resistance zones that we drew just moments ago. Gold here, let's see if gold is making any substantial move. Gold has been down here today, but with the release of the meeting minutes, we haven't seen any dramatic moves just yet. Just coming off the lows here just a bit is the gold market. We'll take a quick look at the NASDAQ. NASDAQ here has been a really strong day for the NASDAQ, pulled back here, and now on this hourly candle that we are currently at, a little bit of movement in both directions, but no immediate knee-jerk reactions here that I'm seeing, Chris.
Agree. I was just looking also, you'd mentioned, gold and silver, the comparison today. What is your bigger picture outlook on silver? Silver is one of my larger positions in my portfolio as far as playing precious metals and hedging and stuff. And I like silver, revisiting $29.50 to $30. I would be a huge fan if we get a breakout above 30 and all of a sudden we're talking $40, $45 silver. But I think a lot of that type of movement plays out with a longer term, weaker dollar. Bitcoin's another big story this year with a break above 32. If we get it, I think the herd jumps right back into Bitcoin. We're talking 48K, we're talking 68K. There could be enough behind that move momentum wise to maybe, in the next 6 to 12 months, see a 100K Bitcoin spot.
Yeah. So to answer your question, I am currently long both gold and silver.
Okay.
in various ways. I've sold puts on silver, as you saw
Yep.
there a moment ago. I mean, tiny
Yep.
positions for me, Chris. I mean, I'm dabbling with options. You have to
Sure.
understand, but gold, I do have a bigger position. Not going too hot for me. It's a lower time frame trade that I picked up this morning.
Okay.
Tried to catch it off of these, here, sort of more intraday 4-hour candles. Tried to catch it off of support here. Not immediate reacting the way I would have liked, but still overall gold bullish. I mean, I have to be careful with it because, again, the gold market is paying attention to, of course, the Federal Reserve, but also the other central banks, where they're headed. And I did kind of like that the RBA signaled a pause, at least for the current time. That was what happened overnight. Of course, we were sleeping at the time, most likely, but with that included, they've also kind of stayed on the stance of more rate hikes are not out of the question. So watching the global central banks tends to be a really important thing for me when I'm talking gold, not just the Federal Reserve, but we've seen sort of this hawkish stance. So those things kind of working against my position. But, I like that we had, from a technical perspective, we had this kind of daily downtrend, but on the longer term basis, I'm talking weekly charts, I still think we're in a nice upward trend in the metals market. I think we have room to go higher. And any fears around, inflation concerns, I think that you pointed out silver, I would say, would probably perform better in a
Right.
super highly fearful inflation environment, especially if the Fed begins kind of, not necessarily rate hiking tremendously. Like you said, the dollar play there is really important for both silver and gold. Again, I like gold. I think we had a nice little breakout here to the upside recently, retested the trend line, broke out. And so as long as we keep putting in higher lows, I'll be looking to be long gold at this time. You mentioned silver. So silver, I also, like I said, I have put sold on this one, and those are in profit at this point. I sold them back a little while ago. So, we could pull that back up just for the silver position. So I've got one that's in profit, sold the August 4th, $20 strike price, and July 21st, $21.50 strike price on SLV. So a little bit different than spot price, but
Right.
but very, very close. What about you? What do you think on the metals market? Do you have any? You mentioned silver is a bigger position for you. What's your longer term outlook? Shorter term? What are you looking at?
So let's talk gold for a second. Also on the daily time frame, there was a nice bounce end of June. So when we ended the quarter, we had a nice bounce off the 200 EMA on gold. So if we're going to hold those levels, at one level that I would note is 1895. As long as we hold above 1895, I think gold still remains bullish. We break below that, we possibly bring back in like the 1840, 1830 level, come back kind of the midpoint of the larger range the last 2 years. If we look at silver right now to me is in a bullish channel to the upside with a bigger range from, you take that giant COVID swing from March of 2020 all the way up to August of 2020. That to me is my big impulsive wave, and I'm looking to see how this whole correction plays out. I'm bullish on silver back up towards 29. I've got a symmetry measurement up towards 35. So I've been doing the same thing. I've owned SLV. I've been trading a lot of options against it to lower my cost basis, whether it's credit spreads or covered calls against my ownership position. So I'm going to hang on to silver until we hit 29 and change. And by that point, my break even is going to be $15, $16. So there's some good profit potential there for me. If I can hang on to it with a breakout above 29, then I think, symmetry goes to 35. We look at a higher time frame, silver goes all the way back to $44 and $45, which would obviously be, I think something has to be kind of breaking for silver to break out like that. But at the very least, from the COVID swing low to COVID swing high, I'm accumulating silver like crazy off the lows at $15, $14, and I'll trade it up to, essentially 100% gains.
Fair enough. Yeah, no, I think silver is a very interesting play, both in the short term and the longer term, moving very uniquely to gold here today. Like I said, kind of outperforming pretty strongly. And so definitely some interesting, we're not seeing any, like I said, guys, when we talk about this news event, the meeting minutes news, it's not the same thing as like an NFP release or a Fed rate hike decision, because again, this is just a report that gets shared publicly at this point, and everyone kind of goes through it, and the markets may be moving for the following couple hours, but it's not sort of a knee-jerk reaction like sort of a headline CPI number would be. So regardless, we are seeing some volatility. We're seeing in terms of commentary that Chris pulled up, it seems like the market saw exactly what it was kind of forecasting, which was, again, a defensive Federal Reserve, meeting minutes, which is, again, what people were kind of expecting. They were expecting that commentary to continue to be on the hawkish side. Hey, we might need to keep going with the rate hikes. Inflation's not where we want it. The same stuff over and over that we've had for several months. This is not necessarily incredibly spike-worthy stuff, as there's nothing quite new to be hitting the floor at this time. Chris, are you seeing anything else on the headlines that's catching your eye at all, or not really?
I just posted in the private section. If you want to actually go through the meeting minutes, there's a link to it. I'm looking at currency strength right now, Nick. I don't really see a lot of activity at all. I mean, we've had now, two little updates to the currency strength. Dollar is still the strongest of the day, but flat, essentially, like very little movement, very little reaction for the meeting minutes. The currencies that were weak this morning have stayed weak. The currencies that were strong have stayed strong. Vertical axis wise, I got little to no volatility today. So I think it's just, we're also coming off a holiday week, right? So, Monday was a partial day with equities markets closing at 1. Forex market stays open, but low volume, low volatility. Yesterday was a holiday for the US. So it might just be a little bit of, go enjoy your summer. Go outside and do something. But yeah, I think that, look, don't let low volatility lull you to sleep and get complacent, because believe me, whether it's July, August slow down, expect September, October to start cranking again. So I think traders need to be ready. I think this is going to be a big move come second half of the year. And again, I don't really know, nor do I care what direction we see, but let's plan accordingly. So, I mean, to me, as far as if we go back and talk about dollar index, I still think dollar index in the near term remains strong, just because the Fed isn't changing their tone. They're pretty hawkish. If the market's going to price in that 25 basis points hike, or the market's going to price in a pause or more restrictive Fed, then the dollar gains strength. But I think as we get into potential recession, and if we see the recession causing the Fed to backpedal and start to cut rates into 2024, that opens up the doors for a weaker dollar. And I think that weaker dollar plays out a lot longer than just a couple of months. I think we could see a 6 to 12 month trend against the dollar.
Yep, definitely worth considering. And of course, as you mentioned, Chris, the coming months will likely heat up. We'll probably also see a spike in interest as we get closer to that July meeting, where they'll be making a decision as to what rate hikes are looking like, and of course that commentary looking ahead into August. So, Chris, I want to thank you for coming on as always with the Fed commentary here. That's I guess your specialty here on the show, and everyone really does appreciate your input. So thank you for coming on. And before you go, let me just remind everybody, guys, go follow Chris Pulver on his YouTube channel. He has socials all over, but make sure to go follow him on YouTube for more of his commentary. He does a great daily show that he puts out on YouTube that I would encourage you to check out yourself. Chris, thank you for coming on, man.
All right. Thanks, Nick. Take care. Have a good day.
All right. See ya. Yep. Always good to have Chris on the show. I always look forward to these Fed meetings because, again, keeping up with Chris, and I feel like Chris by himself is an indicator for me. I like to just get his commentary. So, yeah, absolutely. Make sure to go follow, check out Chris. Let's keep going, though, guys. We've got more stuff to talk about. The euro, we didn't get too much into. Still stuck in a range here, and we didn't get really much volatility out of this, right? The market did not move that much to the meeting minutes. And I know some people might be disappointed, but you shouldn't be, right? Trading is not a casino. Well, it is a casino, but you don't want to treat it like a casino. You're not there to have fun. At the end of the day, if the markets aren't moving, what you need to consider is there wasn't anything that was super market moving. There was no news here that was unexpected. And that's why news sometimes does move and sometimes does not. However, for price action purposes, let's talk euro. So price was able to find a nice strong bounce around the 1.084 level. We found buyers in this area. We are now coming back into this zone. Euro is an interesting one to watch, and I do want to pull up the EDGEFINDER to see if we have any trade setups. So I'm going to go back to the watch list here for a moment. Euro is not on this list, so let's stick to what we do actually have some bias on. So I'm going to start with yen pairs, dollar yen, CAD yen, euro yen. We're going to just kind of rapid fire here. I'm going to take a look at some setups. So dollar yen was the first one on the list. I can't really buy this one, just because, again, it's moved so extremely strong to the upside here. We are kind of in a range bound. So if I was to look at it, it would perhaps be on a dip back into this kind of range bound market. Let's go euro yen, which also has a bullish reading here for us on the EDGEFINDER. Don't hate this one. I think, you know, a retest down into the 156.75 could actually offer some support. Again, past resistance here, turn support. We're now range bound. So if that doesn't scare you, there could be some perhaps interest here in a retest down around that 156.7 area. I'm keeping an eye on that one. Euro yen is on the watch list here on the Edge Finder. So I do like this one as a possible strong buy this week. So keeping an eye on EJ here myself when it comes to the currency side of things. Let's also take a look at GJ. Of course, GJ, another one that I am pretty bullish on. Though don't love the chart here. It's a bit choppy here. I'd like a pullback before I can really get involved. And if I had to be honest here, what I'd be looking for would either be a breakout of resistance here on GJ, right? So what I'd be looking for, this is a 4-hour chart, by the way. I'd probably drop down to the 1 hour, but I'd like to see strength come in here, break us outside of this resistance, and then looking for pullbacks into that for continuation play. So I do like GJ on the long side, but just not quite here. I would prefer Euro Yen at this time when it comes to setups. Let's keep going. We've got a lot of pound pairs on the list here, and pound pairs benefiting from very, very high. Well, I should say benefiting. The pound is getting a strong bid because of their inflation problem. They've got very high inflation. We could take a look at their central bank forecast here and take a quick look at where we're at. You've got GBP, very high levels of inflation still. And this playing into where we're seeing pound strength, right? It would make sense because, again, high levels of inflation, what does that mean? It means rate hikes are still on the table. Hawkishness is still there for perhaps the pound pairs. But look at the euro, right? Take a look at the euro. We take a look at the forecast here for interest rates. What we see here out of Europe is expectations for rates. There's no expectation right now for rates to get cut. We don't even have that on the horizon. So when we look at something like euro compared to Japanese yen, by the way, look at the yen, unexpected or no expectations to rate hike and no expectations to even change. So when I compare the two, euro is expected to stay high, yen expected to stay where it's at. Okay, that's actually a nice bullish factor when comparing the cross. So I do like euro yen. And like I said, I think pullbacks could be opportunities to pick it up on the long side. If I do take that trade, we'll share it inside of our Discord channel. And so, yeah, I am looking for that dip around that 156.7 mark. Let's take a look at some more data here, guys. I want to make sure we're keeping a tab on the Smart Money Tracker. We didn't get our usual Monday overview of the Smart Money Tracker as we were out of the office due to our bank holiday here in the United States. We decided to take off Monday as well here at the office. So we were not in the office, but here's an updated look. If you guys would like to pause the video and take a look at COT data, we have the Smart Money Tracker pulled up. This gives us insights as to what the latest in terms of COT data, the commitment of traders data, is showing where institutional money is positioned right now. So when we take a look at this, we've got yen. I mentioned I'm looking to go long euro yen. Part of that reason is look at the divergence here, guys. Yen is very short biased by institutional traders. Euro, very long biased by institutional traders. There's a nice divergence between the two. We see big money piling in on a euro long trade, and they're still short yen. So when I look at this, this adds confirmation to my trading here to consider where I want to be positioned. Same with dollar yen. Dollar yen also a buy on the Edge Finder right now. Dollar yen compared to dollar compared to yen, we have a nice divergence here. And by the way, gold bulls out there, keep an eye on this one as gold is still very heavily institutionally bought. We'll come back to the COT data and take a closer look when we bring Frank in just a moment. I also want to talk retail sentiment. And also, guys, we're going to drop a link. If you guys would like to try out our data here, we do have a free trial now available. We've set up a way for you guys to do that. If you would like to get set up with a trial to check out our software tool, we are of course, software company that specializes in building tools for FX, currency, and crypto future traders, all sorts of traders that like to look at trading data. If you'd like to make more informed trading decisions, I want to encourage you to try this tool out, to check this tool out, to get a tour, to take a look at this closer. If this would be something you're interested in, perhaps for your own trading, fill out this link right here. This is an application. It will allow you to get more information about our software tool, the EDGEFINDER, which gets you access to things like retail sentiment, smart money tracker, our seasonal trends indicator, central bank forecast, bank signals. We have so many different key pieces of information and a very qualified team behind the scenes working on getting this data in your hands. So again, we just dropped a link. If you guys would like to try out the EDGEFINDER and check it out, get more information about it, click this link right now, and it's just going to open up a form for you to submit, and then you'll be able to set up your trial. So there you go. Check it out. Click that link, and hopefully you get a chance to take a closer look at the EDGEFINDER there. Okay, so we're going to come back to Frank, and we're going to talk Smart Money Tracker in just a moment. But before we do, we've got a quick commercial break to tell you guys about a quick free way, 100% free, no gimmicks, no nonsense. If you guys would like the EDGEFINDER for free, check out this quick break that we're going to do. It's really cool. We have a partnered broker that allows people outside of the US, unfortunately not for the US, but people outside of the US can get the EDGEFINDER 100% for free with our partnered broker. Check this out, and we'll be right back with Frank. Check it out.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and guys, as just mentioned by James in that video, if you guys would like more information about the 8cap EDGEFINDER partnership that we do have going on, please send us a message on our website right now. We do have staff on duty who can help you out with that if you're more interested in getting the EDGEFINDER for free through 8cap. With that said, guys, apparently the dollar is still moving. Let's take just a quick look at dollar, and yeah, making a move higher here. Frank, how's it going? Welcome to the show. What's going on, and what are you looking at today?
Hey, doing well. So the dollar is flying, but I'm not in the dollar. I'm looking at S&P long trades, and I had actually entered one a little while ago. So what I was looking at is basically Powell hasn't really said anything different. The consensus of another rate hike or maybe two to get us to 5.6, 5.75 by year end is still pretty clear. So I don't think he'll say he hasn't really said anything different. Inflation is obviously still the Fed's concern, but PMI is lower. On Monday, we saw lower numbers. So spending is declining. CPI is coming down. Overall inflation core is still somewhat stubborn. Overall inflation is coming down, but there are still concerns of that. So thus the idea of another rate hike or two. But yeah, so what I'm seeing and what we've been talking about for a while now is kind of like the tail end of all of this, and when interest rates will kind of stop being hiked, and they'll eventually go to their pause, and then at some point in 2024 where they're talking about cutting again. So looks like the overall sentiment is just kind of the hawkish Fed is somewhat declining, in my opinion.
Yep. No, and I think we are seeing a little bit of dollar strength here. So would you kind of take this dollar strength as an opportunity to perhaps pick something up on the long side? For example, maybe gold or S&P 500. The dips on these things, of course, being caused by dollar strength here today. If you want to, you've got your chart pulled up. If you want to share that, we could take a look at what you're looking at today.
So I do like gold. I'm still not in it yet because I tested it at the bottoms there, trailed out for some profit. But, price is coming down pretty hard today. So, yeah, I'm going to look for something, maybe another long entry. But today's candle is pretty bearish. So we'll have to see some confirmation for me to want to get back into this trade. but I do like gold to the long side. The same way I like S&P, except the stock market has one more thing that I like, and that's from smart money. There's a very clear bias around this. You can tell that the S&P has had huge number of longs added, and while number of shorts is declining overall. So sentiment overall is getting better. And as we can see, as prices moved up, this incredibly bearish sentiment around this hawkish Fed idea is starting to fade. So less bearish, more bullish stock market overall. And just looking at that drastic change means they're betting on a higher move. So I like the S&P.
Oh, and Frank, tell us about that. Those two columns, those change in longs, change in shorts. What is that referring to? Because I think some of the newer traders might be a bit confused by that. And why is that a bullish signal to you?
So when you see a change in long or change in any kind of contracts, it shows you what the Fed's doing, or not the Fed, what smart money is doing week to week. And what they're doing, what it looks like, is betting on the Fed to sort of remain the course and, pick up shares in the meantime. So a change in long means they're adding shares, they're adding contracts on a week to week basis. And we've seen this for the past handful of weeks right now. Meanwhile, what you see here is a negative number, negative 21,000 to the short side, which means they're not increasing any short positions. They're actually getting out of them. So increasing the number of longs, they're increasingly bullish, and at the same time, increasingly less bearish. So we're seeing, in short, just a larger bullish move. Whereas if we were to look up just one row at NASDAQ, it's not a very clear sentiment change because there's both an increase in longs and shorts. Still net positive because we've got 9,000 compared to 7,000. But what's a very clear bias right here is on the S&P. So smart money is buying up the S&P right now.
Okay, fair enough. Yeah, no, thank you, Frank, for that. Again, I like to bring Frank in for these COT report data tracking moments because, again, it gives us an idea. It gives us some closer look as to what institutional money tends to be doing at this current time. So, Frank, thank you for joining me on the show. As always, thanks for the update, and we'll see you back on the next one.
Yep, thanks for having me.
All right. And yeah, guys, Frank is one of our traders inside of our community at A1 Trading. If you guys are not familiar with our Discord channel, it is something that we do have available we have a paid version, but we also have a free version if you guys would be interested in that. So what we'll do here is if Chandler, if you don't mind dropping the link for the free Discord channel, the sign up form that people can submit. This is really cool, guys. So if you guys would like to join our free Discord, click this link. It will take you to a sign up page. Once you sign up, you'll be able to get into the free Discord channel. Now, the free Discord channel doesn't include everything, but you do get like daily analysis from Frank and from our team here. We put out a lot of stuff. If you're reading our newsletters, if you're reading our Telegram channel or Discord channel, all of that stuff is mostly Frank. He's our readable content guy. I'm more of the video content. He does our readable content. And of course, Frank and I have been trading together for a number of years. Within the Discord channel, if you do sign up for a membership, you can see all the trades being taken by myself, swing trades, position trades, option trades, but as well as Frank. So Frank's taking his stock and swing trades that he does. Between the two of us, we trade everything from cryptos to stocks to currency pairs, to gold, to indices. We're trading a lot of stuff here, and we're very, very active. If you guys would like to join our group and get our trade alerts, join our chat rooms, join our coaching webinars, we do have a way for you to do that right now. We'll drop a link to our Telegram. Our Talk To, which is a way for you to get in direct contact with someone from our staff. So we have people who help with memberships. And if you would like to sign up for a membership and get trade alerts sent directly to your phone, to your computer, wherever you have your Discord, click this link that's been dropped in the chat right now. When you do click this link, what's going to happen is it's going to take you to what I'm pulling up on my screen right now. It's going to take you to a direct message center where you'll actually be connected with someone from our team. I'm not sure why it's not working. Can somebody let me know if that link is working? For some reason, it's not pulling up correctly on my oh, there it is. Sorry about that. It should be working now. When you click that link, click chat now and click access to the VIP signals. If you are interested, you can get 15% off. If you message us right now on the website, someone, a real person on my staff, can hook you up with access to our VIP signals service, which allows you to, again, get all the trades that are being shared by myself, as well as Frank, join our chat rooms, our coaching webinars, and much, much more. So feel free to take advantage of that 15% offer, which is available to people watching the live stream right now. Okay, cool. Thanks, Jane, for checking on it for us. Appreciate that. Yes, so several things making a move here today, but it does seem like the dollar is taking the cake. Big move up here today, coming back to test that 103.4. Dollar bulls in the room. What I would say is watch for the breakout here. I am personally not bullish dollar, but what I would say is that big respect to dollar bulls if they can break this area. I myself, I was long gold here today. I took a loss today. Here is my gold trade. I'll pull this one up for you. I lost $310 on this gold trade. I know that's a little bit hard to see on your screen from your phone or your computer, but I'm down $300 today. So not a great trading day for me, but again, it happens. So I'm down today. Gold ended up breaking the level of support that I thought it would hold. I picked it up long here, did not hold. I'm not going to stick around to watch what happens next. If it does continue to dip and find support, perhaps I'll try again. But for now, I'm going to go ahead and just get out of the way. And again, take a very small loss on gold here today. So I am looking for gold to be bullish, but at this point, I think I'm going to wait to either see some sort of higher low form, or at the very least, or also potentially interesting would be a breakout of this 1930 zone. Another thing that's on my watch list. I took a very small trade and a very small loss here today, so I'm not really too worried about it, but will be interested in looking at gold for the remainder of this week. Guys, we had a heck of a show today. Remember, we had so many different things happen. We talked about the dollar, we talked about gold. Again, there's no need to rush trades, and just because the markets are open does not mean you need to be taking trades. Be very careful out there. Again, I am out of the gold trade that I was in, and will continue to look for more setups. If I do take any trades, you guys will see them inside of our Discord channel. And remember, one more time before we go, if you guys would like to try out our trading software, the EDGEFINDER, which gets you smart money tracker data, retail sentiment, seasonal trends, central bank forecasts, so on and so forth, we've got a link that we're dropping in the chat right now. If you click this link, again, you can try out the tool. You can get a tour. You can check it out for yourself and see if it is something that would be suitable to your trading style. We don't want to sell you something that's not your cup of tea, but you can check it out and get more information by filling out this application form right here to get a trial of the EDGEFINDER. So thank you guys for tuning in to today's show, and we'll see you back tomorrow. Thanks for watching.
And that concludes today's show. Our goal at A1 Trading is to keep you up to date with the latest market coverage through our daily videos and articles. If you like our content, make sure to subscribe for more. You can get funded today up to $200K with FX2 funding. Use our code A1Trading15 for a special discount. From all of us at A1 Trading, have a great day, and we'll see you next time.